Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
$15.
That is the number everyone is staring at right now. The fear and greed index, and it's sitting squarely at 15.
Yeah, that signals extreme fear.
Yeah.
It is a pretty brutal number to start a Monday morning with.
It really is. Welcome to the Deep Dive. Today is Monday, February 2nd, 2026, and we have, well, a massive paradox to unpack.
It feels like it.
We've got a stack of sources here that paint a confusing, almost contradictory picture. On one hand, you have the Federal Reserve saying, hey, the economy is strong, inflation is down, relax.
And on the other hand, you look at the crypto markets, and it is, the sources are calling it a bloodbath.
They really are.
It's a classic case of cognitive dissonance in the markets. We are seeing these massive outflows, liquidation spirals, and, political gridlock in Washington.
But at the same time, and this is what makes today's dive so fascinating, if you look east, specifically to the UAE, we are seeing some incredible infrastructure being built.
Right, stuff that bridges the gap between, crude oil and digital assets.
Yeah, that part about Oil One completely changed how I'm viewing this current slump, but we will get to that. We have to eat our vegetables first.
The bear in the room.
Exactly, the bear in the room. The market is down. Bitcoin is struggling. Let's start with that macro picture. What exactly happened with the Fed to trigger all this?
So the catalyst here was the Federal Reserve Chair, Jerome Powell. He made the decision to keep interest rates unchanged.
Okay.
Now, usually in a vacuum, stability is good. Markets like predictability. Powell explicitly said the U.S. economy is strong and that 2026 is heading in the right direction.
He even mentioned inflation was lower than expected, right?
He did. So you hear all that and you'd think it's a green light for risk assets.
Yeah, exactly. So let's pause there, because this is the core of the paradox. If the Fed chair says economy good, inflation down, why is the market freaking out? Why is Bitcoin down, what, 12.5% in the last 7 days?
That's the central disconnect our sources are highlighting. There's this massive dissonance between Powell's, data-driven speech and the narrative being spun by the mainstream media.
Ah, the narrative.
The media has latched onto a story of uncertainty. They're exaggerating macro tensions, specifically geopolitical stuff like the U.S. and Iran, and that has just fueled this extreme fear sentiment.
So the data says one thing, but the story people are telling themselves is completely different.
And in markets, the story almost always wins in the short term. Precisely. Fear is expensive.
It really is.
And this panic didn't just stay on Twitter. It hit the order books hard. It led to massive ETF outflows. We're looking at somewhere between, $773.9 million and $1.3 billion leaving the ecosystem.
And just to clarify for everyone listening, when we say ETF outflows, we aren't talking about day traders selling a few coins on an app. This is institutional money, right?
Right. This is the so-called smart money hitting the exit.
Okay.
And when you have that kind of capital flight over $1 billion, it triggers a liquidity crunch.
Can we define liquidity crunch a little more? Because people hear that term a lot. It doesn't just mean prices go down, does it?
Not exactly. Think of it like selling a house. In a normal market, there are plenty of buyers. You get a fair price.
Mm-hmm.
In a liquidity crunch, all the buyers just disappear.
Ah.
So if you have to sell, maybe because you borrowed money, you have to take whatever lowball offers left on the table. In crypto, this shows up as a wick down. The price just crashes because there's nobody there to buy it.
And that leads to the forced selling event that the sources mentioned.
Exactly. The notes point to a specific event in the last 72 hours where over $1.6 billion in leveraged positions were liquidated.
Leveraged positions, so that's traders betting with borrowed money.
Yes, they bet the price would go up. When the liquidity dried up and the prices dipped, the exchange just automatically sold their assets to cover the loan.
Which pushes the price down even further.
And triggers more liquidations.
Yeah.
It's a spiral. And that's why we're seeing these really ugly numbers today.
Wow. Okay, that explains the severity of the drop. I'm looking at the snapshot here. Bitcoin's sitting around $76,927. Ethereum's down to $2,241.
And the global crypto market cap has fallen well below that $3 trillion mark we were all getting comfortable with. It's down to about $2.67 trillion.
That's a serious haircut.
It is. But here's where it gets really interesting with investor psychology. While crypto is bleeding, institutions are apparently rotating into AI stocks and precious metals.
So they're not leaving the market entirely.
No, not at all. It's a flight to what they currently perceive as safety or the next big thing. They're just moving their chips to a different table.
Okay, so it's not just about the economics, it's about the story. But speaking of stories, there is a huge political one unfolding in the U.S. that has to be contributing to this uncertainty.
The government shutdown.
Yeah, the partial shutdown. If there's one thing markets hate more than bad news, it is uncertainty.
Oh, sure. And we're currently in that partial shutdown. Speaker Mike Johnson is expected to announce the status of this by tomorrow, Tuesday, February 3rd.
We actually had a listener question pop up in the source material about this. Sarah asked, does this shutdown delay regulatory clarity for crypto?
That is a great question, and the answer is a little nuanced. It's important to distinguish between the two arms of government action here.
Okay.
The shutdown doesn't stop the cops on the beat.
Yeah.
So the SEC, the FBI, the DOJ, they're all considered essential. They're still working. They're still filing lawsuits, still seizing assets.
So if you break the law, the shutdown won't save you?
Definitely not. But the architects, the policymakers, the people writing the new rules that institutional investors are waiting for, they are stalled.
Right.
Committees aren't meeting, bills aren't being drafted. And when policy stalls, big institutional money just hits the pause button. They hate playing a game where the rule book hasn't even been written yet.
And speaking of the cops on the beat, they have been busy. There was a huge seizure mentioned in the notes.
The Helix case, yeah.
$400 million seized from Larry Harmon. Helix was that darknet mixer, right?
Yes. For those who don't know, a mixer is basically a service that tumbles crypto together to obscure the trail. It's often used for money laundering.
And this activity was from way back, like 2014 to 2017?
It took the DOJ, IRS, and FBI nearly a decade to finalize this forfeiture. But the really intriguing part isn't the crime. It's what happens to the money now.
Usually they just sell it as fast as possible, don't they?
Historically, yes. We've seen the U.S. Marshals auction off thousands of Bitcoin from, say, the Silk Road seizures,
Yeah.
often at prices that look comically low now.
Right, they just want the dollars.
But The source mentioned something different this time. They're talking about the Bitcoin Strategic Reserve.
This is a concept that's been floated, I think, by the Trump administration about the U.S. holding a national stockpile.
Correct. The source suggests that legally, these confiscated funds, this $400 million, might not be sold off. They could be the seed corn for this exact strategic reserve.
That would change the game completely. If the government goes from being a forced seller to a forced holder, that removes a huge amount of sell pressure from the market.
It does more than that. It signals legitimacy. I mean, think about it. If the U.S. government decides that holding Bitcoin is in the national strategic interest, like gold or oil reserves.
It validates the asset class in a way no ETF approval ever could.
Exactly. It would turn a potential selling event into a holdall event by arguably the most powerful entity on the planet.
Wow. That would be a massive signal. Okay, so we have fear in the markets, gridlock in Washington, and potentially a secret government stockpile being built.
It's a weird combination.
It is. But if we look away from the charts and the politicians and look at what companies are actually doing, the picture changes again. We have this report here on the state of Bitcoin jobs.
This is one of those signal in the noise moments for me. While everyone's watching the price, the industry infrastructure is actually growing. The report shows that hiring is up for Bitcoin-only companies.
And the thing that surprised me, and I think will surprise a lot of listeners, is that you don't need to be a coder.
Not anymore. That's a huge misconception.
I think everyone assumes if you want to work in crypto, you need to know how to write Solidity or Rust or something.
The industry is maturing. Think about the internet in the late 90s. In 1995, you probably needed to know HTML. By 2000, you needed business development, marketing, operations.
You needed people to run the actual companies.
We're at that stage in Bitcoin. The report highlights roles like operations managers, marketing directors, researchers, community managers. They're looking for business skills.
But is it just plug and play? Can a marketing manager from, I don't know, a toothpaste company just walk into a Bitcoin startup?
Not exactly. The report highlights something crucial. Employers are prioritizing culture fit, a genuine understanding of the asset class.
Okay, so they don't want someone who just blanket applied to 500 jobs on LinkedIn.
Right. They want someone who understands why Bitcoin matters, who gets the ethos of decentralization. They can teach you the specific software, but they can't teach you to care about the mission.
So if you're listening and you're obsessed with this stuff, but can't write a line of code, you might actually be more qualified than a senior dev who thinks it's all a scam.
Absolutely. Your proof of work is your knowledge and passion. And it's not just startups. Look at Ripple.
Ripple, the cross-border payments guys, they've been around forever.
The very same. But they're making a major pivot into treasury management.
What does that even mean? They're building tools for CFOs to manage corporate balance sheets with digital assets.
Exactly. And think about why a CFO would care. It comes down to speed and control. The traditional banking system, SWIFT, is actually incredibly slow and opaque.
You send money on a Friday, it might get there on Tuesday.
Right, and you have no idea where it is in the meantime. Ripple is pitching a world where you use tokenized securities and programmable payments to move that capital instantly, 2004-7.
So it moves crypto from a weird speculative asset that sits in a separate bucket to a functional tool for paying the bills.
You got it. It gives CFOs real-time visibility. It's about modernizing the plumbing of corporate money. And if they're successful, crypto becomes boring.
And you mean that as a compliment?
I absolutely mean that as a compliment. It becomes back-end infrastructure that just works.
Which is a perfect segue, actually, because if Ripple is modernizing corporate money, the Middle East is trying to modernize, well, the most traditional industry on Earth. We have to talk about the UAE.
This is the aha moment of this whole deep dive for me.
Yeah.
While the U.S. is stuck dealing with shutdowns and regulatory ambiguity, the UAE is moving with incredible speed and clarity.
They're building the financial system that the U.S. is still just arguing about.
Pretty much. Let's start with the stablecoin news. The UAE central bank just approved something called USDU.
Okay, another stablecoin. What's special about this one?
It's the structure. We've seen stablecoins like Tether and USDC, but USDU is issued by a company called Universal Digital, and it's backed 1.1 with U.S. dollars held specifically in UAE banks, like Emirates, NBD, and Mashreq.
Why does the location of the bank matter so much? A dollar is a dollar.
It matters because of jurisdiction. This thing is fully regulated under the UAE's Payment Token Service Regulation. It gives the asset total legal certainty in that region.
While in the U.S., we're still arguing in court over whether stablecoins are securities or commodities or something else.
It's a stark contrast, isn't it? In the U.S. lawsuits, in the UAE, a stamp of approval from the central bank.
But the stablecoin is just the appetizer here. The main course is Oil One. When I read this, I had to double check I wasn't reading a sci-fi novel. Tokenized oil.
It is real, and it is happening. Oil One is being launched as the world's first digital asset backed by Gulf crude oil.
Okay, let's break this down. How does this actually work? You're not putting a physical barrel of oil on a server somewhere.
No, obviously not. But you tokenize the rights to it. You're bridging the, $2.4 trillion global oil market with the digital economy? But the real genius here is in the dual peg mechanism.
Yeah, the source mentioned this. It's not just pegged to the price of a barrel. How does a dual peg work?
So think of it as a synthetic asset. Most stablecoins are pegged to one thing, like the US dollar. If the dollar inflates, your stablecoin loses purchasing power.
Right.
Oil One is pegged to both the US dollar and the price of Gulf crude oil.
So it's trying to capture the stability of the currency, but also the real world value of the energy.
Exactly. It mitigates volatility. If the dollar inflates, the oil component acts as a hedge. If oil prices crash for a bit, the dollar component provides a floor. It runs on a blockchain called ARC, which is connected to Circle and USDC.
That sounds incredibly complex to build, but if they pull it off...
If they pull it off, it connects the most traditional industry on Earth, oil, with the modern crypto ecosystem. And think about the implications for trade. The oil market is slow. It has settlement times, middlemen, markets close on weekends.
But on a blockchain.
You enable 247 trading and settlement of energy assets.
That's wild. You could technically trade a barrel of oil at 3:00 a.m. on a Sunday from your phone.
In theory, yes. And this is being driven by the Gulf Energy Exchange in Bahrain, with backing from major U.S. investors. It shows that while the U.S. market is fearful, the global infrastructure is being built to handle trillions in real-world assets.
It really feels like a tale of two worlds today. We started this looking at a fear and greed index of 15 and a market bloodbath in the West.
And we're ending it looking at state-backed stablecoins and tokenized energy in the East.
It's the ultimate paradox. The price action is telling you one story: panic, liquidation, fear. The chart looks like a complete disaster.
But the fundamental developments, the jobs, the corporate tools from Ripple, tokenized commodities like Oil One, they're all telling a completely different story. They're telling a story of maturation.
It brings us right back to that initial disconnect with the Fed. The Fed says the economy is strong, the builders are hiring, the UAE is tokenizing oil, but the price is down.
And that raises the most important question for anyone listening. We get so caught up in the candle watching, staring at the red and green bars on the screen.
Of course.
But if oil, the actual lifeblood of the industrial economy, is moving onto the blockchain, and if corporations are getting ready to use crypto for daily treasury management, does the price of Bitcoin on February 2nd, 2026 actually matter for the long-term future?
That is the question, isn't it? Is all this fear just noise masking the real machinery being built in the background?
History suggests that infrastructure eventually wins out over sentiment. Sentiment is fickle. It can change with a tweet. Infrastructure is hard. It takes years to build. But once it's there, it stays. In the short term, though, sentiment is a brutal master.
Well, looking at those red candles is never fun, but knowing that the pipes are being laid for a digital oil market, that certainly gives you a different perspective on where this is all going.
It certainly does. My advice: zoom out. Look beyond the price ticker for a minute.
That is going to be our final thought for today. Don't just watch the charts, watch what is being built. Thanks for joining us on this deep dive. We'll catch you next time.